Hello traders, today's video is going to focus on managing trades. A lot of times when we as traders enter into a position long or short, the problem is that we hold on to these trades for far too long. So I'm going to give you an example of how we manage trades here at DayTradeToWin. I'm going to use the Trade Scalper software as an example, and I'm going to use the Atlas Line software as an example. Before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. So the first thing we're going to notice is that on the right hand side of the screen I have a bar timer. So usually when we know that a candle based off of time is going to close or open at a certain time, 10-20 seconds left before this candle closes, that's a good thing. And the reason why I say that is because if you look at the prior two examples here on the Trade Scalper, we have a short at 45.41 quarter, and the goal is to make the profit as soon as possible and not hold on to a losing trade. So a rule of thumb is going to be 4 to 5 consecutive candles after you enter. If this trade does not make me money, I am out of the trade, closing the position. And so within the next 4 to 5 candles, it made the profit target. Usually I like to look at the average true range, the ATR, to tell me the distance the market's going to travel. Now, if this is a little advanced for everyone, I recommend you taking a look at a few other videos or give us a call. We'll set you up with a live simulator in order to start trading. We have a free download guide as well if you're new to day trading to get your feet wet into this. The next trade here is a short, double wick short at 45.3750. Again, the Trade Scalper software gave us an example to go short based on this signal. The way the signal is created tells us to go short. And as you can see, the next 4 to 5 candles, the market did not go down at least enough for us to get out of the trade. And that's the reason why we immediately exit the position based off of the next 4 to 5 candles or a time-based stop, because in this case, it didn't work. Now we have another signal here to go long at 45.42 quarter. Again, be objective when it comes to a rule-based. I entered here long at 45.43 on this specific candle. That means that within the next 4 to 5 candles, if I am unable to make a target of 45.44, and that's the target that I'm using based on where I entered, as well as there's a stop in case it just goes right against me, but if I'm unable to make this target, you're out of the trade. And so you see within the next 2 candles, which is really about a minute and a half, 2 minutes, I'm out of the trade. Now, if this situation went sideways and the market chopped around and it went sideways without any result, why am I going to hold on to this trade? So remember, if you're using a 1-minute chart, it's 45 minutes, 4 to 5 candles. If you're using a 5-minute chart, it would be the same. It's relative. It's 4 to 5 candles, which is about 20 to 25 minutes, and you're out of the trade. I call that a time-based stop. Now I'm going to switch gears here. This is the Atlas Line. This is just the other day, April 4th, and now you see a signal. The first signal of the day is the Atlas Line long 45.4650. And so if that's the entry, again using the same principles based off of time, because price action is not just candlesticks and just looking at price, you have to incorporate both price and time as a trader when you're looking at price action. If I was unable, based on this Atlas Line signal, to make a profit within the next 4 to 5 candles, this is my opportunity to cut it loose, get out of the trade. It could be a small win, small loss, break even. It doesn't matter. I gave it an opportunity based off of this signal. In this case, it worked, and I'm out of the trade. So as an example, traders typically hold on to losing trades for far too long. And I know nobody wants to be wrong as a trader. You want to wait until it turns around. You have hope that's going to turn around. But really, our goal is not to hope that it's eventually going to go in our favor. It's to understand here's a reason why I entered based off software, in this case, the Atlas Line or the Trade Scalper or any other software that you may be looking at. And it should come into an immediate result. If it doesn't, cut it loose. If you have any questions, visit DayTradeToWin.com, download the free Get Started guide. You can also download the simulator. We have lots of resources, over 400 or 500 videos available for you to start learning, understanding how to trade based off of price action. My name is John Paul, and I'll see everyone at the next video. If you're new to day trading and want to learn more on the benefits of trading the markets,
Visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and we work exclusively with new and beginner traders who want to learn more on how to prosper from trading.